So back in 2017, there was a thing called the Tax Cuts and Jobs Act that was made a lot of changes to the tax code. It lowered tax brackets, it changed the depreciation amounts, it changed the corporate tax from like 35% down to 21. So it's considered major tax reform. So when this happened back in 2017, this was the largest change to the tax code that happened since 1986. When that happened, why it's important is most of those provisions were actually set to expire in 2025. So if we fast forward to 2025, but rewind from where we are now, this was called the One Big Beautiful Bill Act. So this passed around the middle of 2025, and it revised or replaced a lot of the elements from the Tax Cuts and Jobs Act. Once again, this was considered sweeping tax reform. This was like the biggest changes to the tax code in decades. And so who does it impact? It impacts everybody. Which normally isn't the case, but with a lot of the changes and things that came to be from the One Big Beautiful Bill Act, it affected everybody: retirees, families, employees, most importantly, business owners, or mostly impacting business owners. One of the things I found very interesting about this One Big Beautiful Bill Act is it expanded the IRS funding, specifically in the auditing sector. So they earmarked $80 billion with a B to modernization tools for the IRS, specifically around artificial intelligence auditing, and specifically to focus on high income earners, which the IRS defines those as people earning $1 million plus per year, and small business owners. So if you are a small business owner, if you are a high income earner, what does that mean? You have more likelihood to get audited. That's not necessarily something that should scare you or freak you out. It just means we do need to be organized. We need to make sure that everything we're doing is within the Internal Revenue Code. And most importantly, we have all of the documentation to substantiate it if we need it. And so some of the changes that happened in 2025, bonus depreciation came back. So there's a section of the Internal Revenue Code called 179, which if you have a vehicle that you use for your business and you use it for more than 50% of the time for business, and it weighs over 6,000 pounds, you could potentially take a deduction for up to 100% of the total cost of that vehicle. Whether or not you paid cash for it or not doesn't make a difference. So you could be financing a vehicle and take a large deduction for it. In 2025, research and development expensing came back. So this was a major one right here. This is specifically, I don't want to say tailored, but applies more so to like software companies, artificial intelligence for sure, anyone who's doing research and development activities. So this is for creating new systems and processes in your business, for creating new products and services that don't exist. Expenses spent on those activities went back to 100% that you could take the deduction for, which is huge. There's a thing called QBI, which stands for Qualified Business Income. They changed the phase out from 400,000 to 500,000, which was a big deal. And they preserved a lot of the incentives for retirement plans. So we see it all the time. We have business owners switch over to us, and they're not, for whatever reason, totally aware of how much money they could be putting in these retirement accounts to preserve themselves for retirement, but then use it as a tax deferred vehicle in the current year. So there's a bunch of different ones out there. There's a solo 401k, which is really cool for spouses who work in their business together. They can potentially both contribute to these accounts. So they could put like over 6 figures per year into these retirement accounts. That's money that's now a deduction from the business, and it's growing in a tax-free account for you. There's other ones called like a SEP and a SIMPLE. The SEP stands for Simplified Employee Pension. That way you can put close to $70,000 per year into these accounts. It's money that you're not paying taxes on and now growing for retirement.